Bitcoin, or you could take gold, or you could take, let's say, the advantage of both of those is their money. You easily transfer it. It's very different than real estate, let's say, or equity.
And I think most importantly, honestly, is there's a lot of cash sitting on the sidelines, and a lot of investors are now seriously contemplating an allocation to Bitcoin in their portfolios.
Right. Now, equities are pretty, in a sense, pretty portable.
Pretty portable.
Okay, and that's real value. Okay, so it has the same attributes as long as it's going to be real value, and when inflation changes and so on, its value can change along those lines. So equities are a very viable alternative. You don't want bonds. Cash is a financial asset. You don't want to connect cash. You don't want a bond. It's going to have a negative real return. Like, who wants bonds? You're going to have a negative real return. You want that? Okay, and you're not probably going to get the price appreciation through the bond. There are two ways you can make money. It goes up, or it gives you a good yield. It's not going to give you a good yield, negative real yield, and it's not going to go up much more when you get down to that, so you don't want the bonds. Stocks have an asset. They're a reflation asset throughout history. So there are things that you want. You want stocks, you want gold, you want tangible assets, you want real estate, you want the things that are basically anti-money. And you particularly want those when there's a large portfolio of those. Think about it right now. Through history, what we accumulate are a lot of financial assets, and the only purpose of those financial assets is to take those and convert them into buying things.
Yep.
And when there's a lot of financial assets, and we produce a lot more financial assets, then they're all claims for those other things. And and if you just went through the calculations and you were to say, okay, how much financial assets do you have relative to real assets, or how much are there? There's too many relative to real assets. And so you want to get into those things that have more of those intrinsic values. A company is, crypto is like a lot of historic currencies. There are some that have intrinsic value. It doesn't have intrinsic value, but it has a limited supply. And as long as it's accepted for payments and so on, and has a limited supply, if the demand grows more than the supply grows, it goes up, and it serves that purpose. And it's done a heck of a job of programming, stood the test of time, meaning it hasn't been hacked and so on. And so it's a viable alternative. And I think that most of the people, and there are different reasons for owning it, but I think most of the people would say, is it a storehold of wealth that's limited in supply and maybe not controlled, and is it a viable alternative to a fiat currency?
Right.
I mean, like, don't trust a fiat currency. So how does it compare to the fiat currency? And so is it an alternative gold kind of thing? So there's probably an attraction in there, and it has an attraction for me in there. But then there's the question of it, and like how many in the audience, let's ask the question, how many in the audience have some in gold? I'm curious.
Let's do that. How many people have some gold?
A lesser percent.
Lesser percent. I'm going to go 50% or less, 40 even maybe.
Yeah. So that becomes an interesting question. So like for me, I don't have a huge amount, but I have more gold than I have crypto.
Okay.
And so and my basic thing is, rather than make it crypto, or rather than make it Bitcoin or the other, I would say diversification is a good thing. We could get into the merits of the one versus the other. I don't know where you want to go with this.
Sure.
But in any case, like, let me tell you that either one of those, crypto can go like that, meaning governments can regulate it, outlaw it, or it can be traced and certain other things. So, diversification is something I would emphasize.
Part of the argument, though, on crypto, when it comes to the regulatory regime, is or would be that it's already reached escape velocity. That it's at a level now that there's so much value around the globe that it would be almost impossible to shut down. It's a little bit like Uber. I oftentimes think about it like Uber, because when Uber started, people thought regulators were going to shut it down, but they grew so fast, so quickly, that all of a sudden regulators didn't really have a choice. They just had to figure out a way to deal with it.
Okay. there are a couple of things in that. First of all, no, I think that it's easier to deal with now. If you didn't, let's step back. Governments don't want alternative currencies, okay? Because, and throughout history, we see that they want control over the currencies for all the various things.
Especially when you have a successful currency. But if you have a lousy currency,
That's what I mean.
like El Salvador,
There's, well, I mean, or there, since 1700, there have been about 750 currencies. Only 20% of those are still in existence, and all of those have been significantly devalued at one point or another.
Okay.
So we don't have to pick El Salvador. We can pick the German. We could we can go through history and pick the most credible ones. It's the norm, right? And so, in any case, what I'm saying is that you don't want, if you're holding a currency, or it's an awfully good way to print money and get the money around, which is going to devalue. Because what is a debt that you're holding? Currency equals a debt.
Right.
And it means that you receive something and now you have no interest rate on it, and they're producing a lot of it.
Right.
Okay. And so it's the way out. It's ultimately the way out. Because if
Cash
you
is
keep
the
it
way out,
hard,
yes.
if you keep it hard, you have a big debt crisis. And if you don't keep it hard, you don't keep it hard. So history's always been the devaluation. So there's a point of that. And they want that.
Right.
Because if you look at history, if they don't have that, but think about that dilemma. Just the fact that we're talking about the possibility of that dilemma means that you're going to want something else. And I don't see why one has to be, there's not even enough choices of those
Right.
types of things. So we could take Bitcoin, or you could take gold, or you could take, let's say, the advantage of both of those is their money. You easily transfer it. It's very different than real estate, let's say, or equities.
Right.
Now, equities are in a sense, pretty portable.
Pretty portable.
Okay, and that's real value. Okay, so it has the same attributes as long as it's going to be real value, and when inflation changes and so on, its value can change along those lines. So equities are a very viable alternative.
Right.
They're a good alternative. But you think of this category of things that can't be devalued. So the equity bull market that we're having is an extension of that. It's the same thing. Don't differentiate it. What did you think happened? We distribute a lot more credit and a lot more money. There's a flow of funds. There's a mechanics to it. You have a lot more money. You get the money, and then you buy things. An investor who gets the money, when there's an intervention, when the central bank buys, they buy a bond
Right.
from an investor. And the investor gets cash, and what do? They invest it someplace else. And all through that process, there's the mechanical
Right.
part of that, and that's what you're getting. So I don't think we even have to split hairs in terms of the one or another, just to make sure you have enough of a diversified portfolio of that and know what kind of an environment we're in. And we're talking now about the money and credit part of that. We also should be talking about the wealth gap part of that, because that affects it, because there has to be a transfer of wealth, okay? So that's going to affect investors, how that transfer taxes and those things are going to take place. And then you have to take a global view
Right.
of these things, which includes China and other countries